Hey everyone, and welcome to another deep dive. Today we're going to be looking at the world of crypto and AI, and we've got a really fascinating pile of sources here, a recent episode of the Crypto and Coffee podcast. So imagine this for me, Bitcoin's kind of bouncing around below $100,000. We've got these CPI numbers about to come out, everybody's on edge, and then boom, the Biden administration drops this new rule for stablecoins. Like, what's the deal with Bitcoin and the US government these days? What even are stablecoins? And why is everybody freaking out about inflation? Well, you don't have to be a crypto wizard to figure it out, because that's what we're here for. We'll break it all down. All right, so one of the things that really jumped out at me from the source material was this whole thing about states creating Bitcoin reserves. And it's not just like one or two states, right? We're talking Texas, Pennsylvania, Ohio, New Hampshire, even North Dakota is getting in on the action. They're all kind of exploring different ways to do it. But what's the motivation here?
Well, it's a pretty interesting trend. It suggests that they're looking for ways to diversify their assets and maybe hedge against inflation. Inflation eats away at the value of cash, and states are looking for a way to kind of protect themselves financially.
Right, that makes sense. Is it just about inflation? I mean, could there be like a political angle to this too? The source material mentioned that some people see this as a way to push back against federal monetary policy.
Yeah, there's definitely a political dimension to it. Some Republican leaders have been critical of the Fed. They say they're the ones who caused this whole inflation mess. So embracing Bitcoin could be seen as a way to kind of assert more financial independence from the federal government.
So they're basically saying they don't trust the dollar as much as they used to, and they want to explore alternatives.
Wow.
What could happen if other states start doing the same thing?
Well, if this trend catches on, it could have a big impact on how Bitcoin is perceived as an asset. It could give it more legitimacy and encourage big investors to take it seriously.
Yeah.
But there are risks, too. Like, imagine if states invest a ton of money in Bitcoin and then the price tanks. That could cause some major budgetary problems.
Yeah, that's a gamble, for sure. It'll be interesting to see what happens. But let's move on to this stablecoin rule that's got everybody buzzing. So the Consumer Financial Protection Bureau, CFPB for those in the know, they're proposing new rules, and the source material says it's all about data privacy, consumer protection, and making sure new companies can compete fairly. They're even asking for public feedback, which is kind of cool. But what does all this really mean for stablecoins?
Well, the CFPB is really focused on how stablecoins are issued and managed. They're especially interested in something called algorithmic stablecoins. These are a newer type of stablecoin that uses algorithms to keep their value pegged to the dollar instead of relying on reserves. They want to make sure consumers are protected from scams and that stablecoin issuers are being transparent.
Right. Which brings up a question that one listener asked. Should stablecoins face tougher regulations, or should they stay decentralized?
Ooh, that's the million-dollar question.
Yeah.
There are good arguments on both sides. Regulation can bring stability and protect consumers, but it can also slow down innovation and make it harder for people to access them. Decentralization promotes transparency and gives people more control, but it can also lead to more scams and make things less stable.
Sounds like it's a tough balance to strike. The source material also mentioned that Tether, which is like the big dog of stablecoins right now, could be seriously affected by these new rules. What are some of the possible scenarios we could see play out over the next few years?
Well, one possibility is that Tether adapts to the new rules and stays on top. They've been through tough times before. But it's also possible that these regulations open the door for competitors, especially ones that are more transparent and compliant right from the start.
So it could be a turning point for the entire stablecoin industry.
Interesting. Before we move on, you mentioned algorithmic stablecoins earlier. Could you tell us a little bit more about how those work and why they're causing such a buzz?
Sure. So algorithmic stablecoins are designed to hold their value against a fiat currency, like the US dollar, using algorithms and smart contracts. Instead of holding actual dollars in reserve, they use different mechanisms, like adjusting the supply of the stablecoin to control its price. This approach is considered more decentralized and potentially more transparent. But it also introduces new challenges and risks.
So it's all about finding that sweet spot between stability and innovation.
Yeah.
Right. But I'm sure some people would argue that too much regulation could stifle the growth of stablecoins and the whole DeFi ecosystem.
Oh, absolutely. It's a delicate balancing act. Regulators want to protect consumers and keep things stable, while innovators want the freedom to experiment and push the boundaries of blockchain technology. The key is to find a middle ground that encourages innovation while also managing the risks. Definitely a lot to think about. Well, let's shift gears for a moment and talk about another cool intersection of tech, AI and DeFi. This source material was highlighting how some experts believe AI could totally change DeFi security by as early as 2025. They're talking about using AI to make smart contracts safer spot scams before they happen and even offer customer support in a decentralized way. Is this all hype or is there real potential here?
I think there's definitely real potential. AI is incredibly good at spotting patterns and finding things that are out of place. Imagine an AI system that's constantly scanning blockchain transactions for suspicious activity, flagging potential scams or security holes in real time. That could make DeFi platforms way more secure and reliable.
Like a super-powered security guard patrolling the DeFi landscape. But what about using AI for customer support? How would that even work in a decentralized world?
One possibility is using AI-powered chatbots that can answer common questions, walk users through processes, and even give personalized financial advice. This could make DeFi much more accessible, especially for people who are new to crypto and find it all a bit intimidating.
That makes sense. Makes it more user-friendly. This source material also mentioned a proposed debate series asking, does blockchain need AI or does AI need blockchain? Seems like they could both benefit from each other, right?
Absolutely. It's a win-win situation. AI can make blockchain technology more efficient, secure, and user-friendly, while blockchain can provide a secure and transparent platform for developing and using AI solutions. It's a really exciting area with a ton of potential.
It's like they're two sides of the same coin, each bringing something unique to the table. This has been a really informative deep dive so far. Let's take a short break and come back for part 2, where we'll explore some even more fascinating developments in the world of crypto and AI. Stay tuned.
All right, we're back. I feel like I've already learned so much about this whole crypto and AI world. What about you?
Yeah, it's definitely a fast-moving space. Always something new popping up. Speaking of new developments, let's go back to that stablecoin rule from the CFPB for a minute. What I found really interesting was that the source material suggested it could have a big impact on Tether, which is like the king of stablecoins right now. What do you think that could look like?
Well, remember we talked about how Tether has faced some scrutiny before,
Yeah.
about their transparency and their reserves.
Yeah.
If the CFPB comes in with these strict regulations, it could force Tether to make some major changes to the way they operate.
So basically adapt or risk losing their top spot.
Exactly. They might rise to the challenge, become more transparent and hold on to their market share. But there's also the chance that these regulations give an advantage to their competitors, especially the ones that have been built with transparency and compliance in mind right from the beginning.
Kind of like those algorithmic stablecoins we were talking about?
Precisely, algorithmic stablecoins.
Mm-hmm.
With their decentralized nature and potential for better transparency, they could become even more attractive to regulators and users if those traditional stablecoin issuers are struggling to adapt.
So we could see a power shift in the stablecoin market.
It's definitely something to keep an eye on. This whole situation really shows just how dynamic and unpredictable the crypto space can be.
And speaking of unpredictable, the source material had a couple of cautionary tales in there that I thought were worth mentioning. We've been focusing on the exciting possibilities, but there are definitely risks involved, right?
Absolutely. The crypto world is still pretty young, and it's important to remember that not every project or platform is going to make it. There will be bumps in the road, and sometimes those bumps can be pretty significant.
One that caught my eye was the story about Mango Markets. It was a Solana-based, decentralized exchange that had to shut down. What happened there?
It sounds like Mango Markets had been dealing with legal issues stemming from an exploit that happened a while back. It seems like they couldn't resolve these issues to the satisfaction of regulators or their users, and ultimately they had to make the tough decision to shut down.
It's a reminder that security is absolutely crucial in this space, and that past vulnerabilities can come back to bite you. The other story that jumped out was about Bybit, a popular crypto exchange that's facing temporary restrictions in India. Do you know anything about that?
Yeah, from what I understand, that situation is related to some ongoing regulatory changes in India. The Indian government has been taking a closer look at the crypto industry, and it seems like Bybit's operations weren't quite in line with their evolving rules.
So it's a case of regulatory uncertainty causing problems for crypto businesses.
Exactly. It shows how important it is for these crypto companies to stay up to date on the regulations in the countries where they're operating, and to be ready to adapt as needed.
It's a good reminder for individual investors, too. Do your research, understand the risks before you jump into any crypto project.
Okay, so we've talked about some of the potential pitfalls. Now I want to switch gears and talk about a place that seems to be embracing blockchain with open arms. Dubai. The source material highlighted Dubai as an emerging blockchain hub, and it sounds like they're making some serious moves. They mentioned this massive billion-dollar deal between the developer Damac Group and this blockchain platform called Mantra. and it involves something called tokenization of real estate assets. Can you explain what that means and why it's such a big deal?
Sure. Tokenization basically means taking a real-world asset, like real estate in this case, and representing it as a digital token on a blockchain. This allowed you to divide ownership of something like a property into smaller, more manageable units, which can then be easily traded or invested in online.
So it's like taking this big expensive asset and breaking it down into smaller pieces that more people can afford to invest in. It's exactly. It has the potential to open up real estate investment to a wider audience and make it much more liquid. What's interesting about this Damic Mantra deal is that they chose to work with Mantra, which is a relatively new blockchain platform, instead of a more established one like Ethereum.
Is there a reason for that? Why would they choose Mantra over something like Ethereum?
There could be a few reasons. Maybe Mantra offers specific features or capabilities that are a good fit for tokenizing real estate. They might also offer better terms or closer support than some of the bigger, more established platforms.
So it could be a combination of technology cost and the relationship between the companies.
Precisely. This deal shows that the blockchain world is always changing, and new players are coming in with innovative solutions that are catching the attention of big companies.
It seems like Dubai is really trying to position itself as a leader in the crypto industry. The source material also mentioned that MasterCard is launching its crypto credential services in the UAE and Kazakhstan. What's that all about?
MasterCard's crypto credential solution is all about making crypto transactions easier and more user-friendly. It lets users send and receive crypto using simple aliases instead of those long, complicated blockchain addresses that we're all used to dealing with.
So no more copying and pasting those huge strings of letters and numbers. That sounds like a big step forward in terms of usability.
Exactly. It makes things simpler for new users and makes crypto transactions more intuitive and accessible. This could be a big driver for mainstream adoption of crypto.
And it's not just for peer-to-peer transactions, right? I read that MasterCard wants to use this tech for things like NFTs and ticketing, too.
That's right. The potential applications are pretty broad. It can streamline all sorts of transactions and interactions, making it easier for people to participate in the digital economy.
It's clear that Dubai's proactive approach to blockchain is making waves. It'll be interesting to see how their initiatives develop and what kind of impact they have on the global crypto scene. Well, we've covered a lot of ground in this deep dive, but there's still more to explore. Let's take a short break and come back for the final part of our journey. We'll tie everything together and leave you with some thought-provoking questions to ponder. See you in a few. All right, we're back for the final part of our crypto and AI deep dive. You ready to do some big picture thinking?
I am. It's been quite a journey. From Bitcoin's political ambitions to Dubai's blockchain dreams. We've seen a lot of fascinating stuff.
Let's do a quick recap for our listeners. We started out talking about those Republican-led states looking into Bitcoin reserves. Then we got into stablecoins, the CFPB's proposed regulations, and the potential rise of algorithmic stablecoins. We even touched on some cautionary tales like the shutdown of mango markets and Bybit's troubles in India. Just a reminder that this space isn't all sunshine and roses.
Right, and we saw how AI could completely change DeFi security, make transactions safer and easier for everyone. Then we took a virtual trip to Dubai, where they're embracing blockchain tech across the board, from real estate to finance, even attracting big players like MasterCard.
Yeah, it's amazing to see how fast this whole space is changing. Makes you wonder what the future holds. So what's the biggest takeaway for our listeners? What does it all mean?
Well, I think the main takeaway is that the financial world is going through a major transformation. Cryptocurrencies and blockchain tech are shaking things up in ways we couldn't have imagined just a few years ago.
It's not just about numbers and markets anymore. It's about power control. Even the very idea of money itself.
Exactly. And AI is adding another layer of complexity and potential disruption. It's speeding things up and making us rethink everything we thought we knew about finance.
It's exciting and a little bit scary all at the same time. What advice would you give to our listeners who are trying to navigate this whole new world?
I'd say the most important thing is to be curious. Stay informed about what's happening, but don't just follow the hype. Think for yourself. Question everything. Don't be afraid to challenge the way things are.
Great advice. And remember, this is still a relatively new space. Things are changing all the time. There are going to be bumps along the way. So be aware of the risks and make smart decisions. Now, before we wrap things up, I want to leave our listeners with a final thought, something to really chew on. Imagine a world where decentralized finance becomes the norm. Traditional banks are replaced by blockchain platforms, and AI is managing and securing our financial lives.
Wow, that's an interesting thought. What would that world look like? Would it be more fair, more transparent, more accessible? Or would it create new problems and inequalities?
Those are the questions we need to be asking ourselves as we move forward. And on that note, that's a wrap for today. Thanks for joining us on this deep dive into the world of crypto and AI. I hope you found it insightful, thought-provoking, and maybe even a little bit inspiring.
And remember, the future of finance is being shaped right now.
Right.
And you have the power to be a part of it.
Until next time, happy diving.